woke up 3 a.m. Futures on the screen. Pull up the wolf chart. Candles looking clean.
What's going on, stackers? This is the most important week of the month, and almost all of it hinges on one single afternoon. Wednesday, 2 p.m. Eastern, that's when the Federal Reserve makes its calls, and the entire market either thickens up like a good Roux or it breaks. So before you put a dime to work this week, let's walk the whole thing together, calm, prepared, and step by step. By the end of this, you'll know exactly what's going to happen, why it moves your stocks, and how to come in with a plan instead of guessing. So let's get into it. So first, the big one, the Fed. The Fed is America's central bank. Think of them as the people who set the price of money for the whole country. And this week, they hold their FOMC meeting. FOMC is the Federal Open Market Committee. These are the people who vote on interest rates. Here's why that matters to you. Even if you never touched a bond, interest rates are the price of borrowing money. When rates go up, money gets expensive. Companies borrow less, they grow slower, and investors pay less for their stock. When rates come down, money gets cheap. Borrowing is exponentially easier, growth speeds up, and the stock usually catch a bid. So the Fed doesn't just move rates, they move the price of everything priced in dollars. That's why one afternoon can decide an entire month. Now here's the part that beginners miss. The market doesn't just trade the decision, it trades the dot plot. Twice a quarter, the Fed release its SEP, which is the summary of economic projections. Buried in that SEP is the dot plot, a chart where every Fed official drops a dot showing where they think interest rates should be down the road. No names, just dots. Why do traders care about this so much? Because the rate decision this week might be already expected. The surprise live in the dots. If the dots show more cuts coming in the future, that's a gift to stocks. If they show rates staying higher for longer, that can sting. The market is reading the future, not just the headline. Remember that. We trade what's confirmed, not what we hope for. Let me go ahead and lay the week out on the counter so you can see the entire dish. So Monday will be quiet, low news day. This is prep day. You're building your watch list, not forcing trades. Midweek leading in, we get our economic data, retail sales, housing numbers, and jobless claims. We also get the Philly Fed Index. Good context, but none of it's the main course. On Wednesday, 2 p.m. Eastern, notice that I named a specific time for this event because it is the main event. The rate decision drops. The SEP and the dot plot hit at the same time, and the press conference follows at 2:30. This is the afternoon the whole week is built around. And on Thursday, we have two things: jobless claims, and this is also when quarterly options expiration lands this time around, which is also known as quad witching. And Friday, we got Juneteenth holiday. The market is closed. All right, so Thursday is triple witching, sometimes called quad witching. All right, so a few times a year, a big batch of futures, options, all expire at the same time on the same day. That's triple witching. It brings huge volume and some strange price behavior. One thing you will see is pinning. Pinning is when a stock gets stuck near a price where a lot of options expire. It almost acts as a magnet because so many options are set to expire right there. It can sit and hover like a pot at a low simmer. Here's the twist this week. Normally expiration is on Friday, but Friday is a holiday, so it's pulled forward to Thursday. That means the pin can hold into Thursday, and once those contracts clear, the market can get unclamped heading into a 3-day long weekend. Less holding it in place and more room to move. Respect that. Okay, Q, but I trade stocks, not the Fed. I hear you. Here's the bridge. Some stocks barely flinch when rates move. Others swing hard, The word for that sensitivity is beta. High beta names move more than the market, both directions. And the most rate sensitive group is usually small caps. Small caps are smaller companies that lean on borrowing money to grow. So when the Fed talks about the price of money, those names listen hardest. That's why the 2 p.m. headline on Wednesday can light up your watch list by 2:01. So please do a top-down analysis on IWM, which is the Russell 2000. Quick one, if this is making the week make sense, hit the subscribe button and hit that notification bell. We're starting to do this every week, so go ahead and make your way to that Discord, and you can get the heads up. Most people don't give you that. When 2 p.m. hits on Wednesday, it lands in one of the three buckets. Dovish, the Fed sound friendly to growth, cutting rates, or hinting cuts are coming. Dove equals cheaper, easier money. Stocks usually like this, especially small caps like I mentioned before. Inline, they do exactly what everyone expected and say nothing new. The reaction often lives entirely in the dot plot and the tone of the press conference. And then you have hawkish. The Fed sounds tough on inflation, rates staying higher, longer. Hawk equals tighter money. This can pressure stocks and hit high beta names the hardest. You do not predict which one that we're going to have. You prepare for all three. So how do we actually trade a week like this? Simple, 3 rules. Number 1 is respect implied volatility. Implied volatility is the market's expectation of a big move. Before a Fed's decision, IV runs hot. Everyone's bracing. That means options get way more expensive, and the second the decision drops and uncertainty clears, you get an IV crush. An IV crush is when that expensive option premium collapses almost instantly. You can be right in the direction and still lose because the error came out of the option. So if you don't understand IV yet, that's your homework before Wednesday. 2, no size before 2 p.m. Monday and Wednesday are for 2, no size before 2 p.m. Monday and Tuesday are for prep, not heroics. Don't force a position into the biggest event of the month hoping to front run it. You don't taste the roux before it's done. And 3, go light into the long weekend. Thursday's expiration plus a 3-day holiday is a lot of moving parts. Smaller size, tighter focus, no overnight gambling into a closed Friday. Plan first, size small, wait for confirmation. So here's your week. Monday and Tuesday, we lit the simmer, which is the prep, watch list, patience. Wednesday at 2, the roux either thickens or it breaks. Thursday, it gets unclamped until the holiday. Friday, we rest. Don't taste it too early. Come in with the plan, respect the 2 p.m., and let the week confirm itself. If you want to walk it with us in real time, the full week's trade plans drops in the Discord. And joining the trading route is free right now. Link is in the description. Come prep with the pack. This is educational, not financial advice. Make your own calls. Stack smart, stackers.
200 cloud below me, WTMA green. Arc is curving up, you know what that means. Demand's on holding, supply getting swept. OB overhead, now the path is set. I don't guess, I don't help, I don't bet, I run the protocol. I ain't lost shit, they ask me how I trade.